Now, the Nigerian stock market index return is back in the double-digit positive territory of around 11% in the November that ends today, after it nearly lost it all at the middle of the year. So the question is whether a Santa Claus rally is still possible on Customs Strait as we start the final moment of the year on Thursday. Licensed dealer and CEO at Carry Asset Management, Johnson Chukwu, is on the line with me for some insights. Okay, so we're looking at the end of the year right now from tomorrow. Thank you. Good evening. Thanks for coming through. Was November a bullish or bearish month on the equity side for you, Johnson?
Thank you, Bosin, for having me. Of course, if you look at the performance of the market in November, you will realize that market was quite bullish in November. In November alone, the market gained 8.7%. Which is why the year-to-date market appreciation is about 11.57% as at the end of business today. So November was a very bullish month, and of course that was driven largely by the fact that several counters reported very positive operating profit for their third quarter, and then the market was riding on the positive performance report from the quoted companies that were published for the third quarter of the year. And irrespective of the fact that we saw further contraction in monetary policy rates, the market still gained 8.7% in the month of November. So November was a good month for the market.
Let me ask you what the sentiments were for investors and dealers in the month that ended today. What was the sentiment like broadly speaking?
Well, the sentiment was mixed, and what I say mixed is that there were some macroeconomic factors that were dampening investor sentiment in the market. For instance, the increases in monetary policy rate, the further contraction in money supply by increasing the cash reserve ratio to 32.5%. Of course, we saw the September MPR increment to 15.5%, which was further increased in November to 16.5%. And then we also saw the reaction of investors to the redesign of the Naira, which led to Naira depreciation, massive depreciation that almost touched 1,000 Naira to $1, about 900 Naira to $1. This we have negative sentiments in the market. But on the flip side of it, on the positive side, we saw market performance reports for the third quarter of many quoted companies, which were mostly beyond the expectation of investors. So investors took solace in the fact that the operating businesses still have very strong balance sheet, still have very strong earnings, and then both prospects for strong dividend payment at the end of the financial year. So that swung the market sentiment on the positive, and eventually ended on the high side.
So the market looked at the macroeconomics. What about the monetary policy side? 500 basis points so far this year by the central bank in terms of interest rate hike. How did the market take that in November?
Well, that was very dampening for the market. So if you consider the fact, like you mentioned, we have seen a 500 basis point increase in monetary policy rate from the previous 11.5% to now 16.5%. We saw a 500 basis point increase in cash reserve ratio from 27.5% to 32.5%. And then we've also seen situation where the central bank is also using unorthodox tools to further withdraw liquidity from the system. So these things had negative impact on the market, which was why prior to the performance in November, as at the end of October, the market had only gained, the year-to-date market appreciation was just in the region of 4%. But interestingly, because of the positives coming from performance of the quoted companies, we saw the market trend turn positive in November. But in summary, the fact that we've seen contractionary monetary policies has had a dampening effect on the market. Without that, we would have seen a higher market appreciation rate or year-to-date market appreciation than what we are seeing today.
Okay, so the Central Bank of Nigeria did interest rates between May and now. So we started the year around 18% on the NGX all-share index return. Then we lost it to a single digit. Then we ended in November now at about 11.6%. So is there a further room for expansion, what you call a Santa Claus rally? Is that likely to happen as we step into the new month, December, tomorrow?
Well, I think we should still see some positives. It may not be as steep as what we saw in November. The simple reason that we're moving deeper into the election period. The uncertainties around the election will begin to weigh on the market. But on the positive, investors will be watching out for counters that have strong prospect of paying improved dividend. And looking at the third quarter performance of those companies, they are going to begin to interpolate what their full year result is going to be. And investors may begin to take positions in this month ahead of the closure of the financial records of these companies, so as to take position before the prices will move further up or further north. So I think in terms of performance of the quoted companies, it will be a major pull for investors to take further positions on quoted companies with strong fundamentals. But we should also expect that the electioneering activities shift from increase in interest rates will all work against a very bullish market trend in the month of December. So give and take, I think the market will close positive in the month of December, but the market appreciation may not be as high as the 8.7% we saw in the month of November.
So if I ask you what you and your team at Carrier Asset Management is thinking, what you think the playbook will be for the new year 2023, do you think the first quarter, which is more of the electioneering, going into the elections proper, will raise a little bit of the country's political risk quotient when investors are considering how to invest into the new year?
Yes, I think what will happen is that the first quarter of this next year will be segmented into 3 different months: January, February, and March. January market will remain relatively calm. And in February, I think the market will slow down. Investors will want to watch how the election holds or the direction of the election. Immediately after the presidential election, when the outcome is known and the presidential candidate is elected, we're going to see market activities that will reflect the confidence or lack of confidence in the newly elected president. So if the market has confidence in the newly elected president, we're going to see a bullish run in the month of March, because investors want to take position ahead of even foreign portfolio investors coming back into the market. So, and that will, then the policies of the new government will define what happens in subsequent months.
I was just about to ask you, if first quarter looks like that, what happens to the rest of 2023, in your opinion, on whatever happens, whoever becomes the president, whatever the team looks like? Do you think the first quarter will determine the rest of 2023 for you?
Yes, I think the month of March will mostly shape what we should expect next year. If in March, investors are excited with the outcome of the election and come back bullishly into the market, starting from local investors, we should expect foreign investors to come back into the market. We should expect investment flow to come into the economy, and we should expect some level of macroeconomic stability, which will all augur well for the market. So the outcome of the election will define what will happen in the market in 2023.
Well, it may be too early to start asking you, what do you think the index return will look like? Election is going to be a major make or mar for next year, and I'm sure first quarter will be an interesting period to watch. Thank you so much. We really appreciate your time on the show tonight. As always, we thank you. Thank you so much, Justin Chukwu, the CEO at Carrier Asset Management. Have a great evening.